Hello, everyone. Welcome back to the RationalInvestor.com's daily brief. Gonna try and really make this a recap here today. No more bullshit. Yeah, right. Good luck. Oh well. Actually, I purposefully made the daily brief rant today 2 hours. That's why I'm doing this so late with you guys here on YouTube, so that I would feel exhausted and I wouldn't sit here and talk on YouTube for an hour, because that's kind of making the whole daily brief idea kind of pointless. So, quick summary. And Kevin, after can you do me a favor and just like hit a bell or something after 5 minutes, and 3 bells means we're done. I don't know. I'd appreciate it if you could. Really want to try and keep this to 15 minutes. So what's going on in the world today? We got the FOMC meeting today and tomorrow. So we won't really get a decision until after they're done tomorrow. And of course, we said we have quadruple witching on Friday. Options expiry. We have an EVU coming up the end of the week. Yesterday was the Ides of March, so obviously this is a sort of a big sort of pivot point for the market. I get the impression that the market is anticipating that the Fed will start raising interest rates to stop the slide in the bond market and maybe put a halt to these runaway commodity prices, but I don't think they're going to. And I think they're actually going to say that they're perfectly fine with these rising asset prices. It's not really that big of a deal, which it is, but to them as bankers and 1% and all that wonderfulness I go on about the banking cartel elite, to them it's not an issue, but to you and I working stiffs, it sucks. The tax, the 1% banker tax goes on. Actually, it's what is it? It's 2%, right? That's what Mr. Powell's expectation is. I also do, though, get the impression that the Americans have gotten away with this. I think if the Americans were as vulnerable as they could have been, they would have destroyed the U.S. dollar and the U.S. economy and the U.S. hegemony. But there just isn't a bigger player on the block right now. The reason why Germany failed in the 20s there was because there was alternatives. Bank of England, this new country, the United States of America, and all that. And I still find it fascinating that even though China, saber rattling, all this kind of stuff, they still have their currency pegged to the U.S. dollar. So that means that technically they are just another de facto U.S. dollar proxy. So I don't think there really is any competition. Everybody's pegged to the U.S. dollar. That means everybody's pegged to what the U.S. Federal Reserve Board's plan is here. So we'll see how it goes. Everybody but one asset, of course, that is immune to all this, right? I don't necessarily agree with that thinking, but having said that, the orgy within crypto is very, very strong. It is showing a little signs of weakness here, so I don't know whether we've hit a cycle peak here or not. But it'd be interesting to see how these DeFi plays play out, and whether this small problem that developed overnight, whether it turns into a bigger problem. We will see. So, while the Fed's talking, there's not really much for us to say. U.S. dollar's probably waiting for their resolution, and with this gap down here and reload zones down below, I wouldn't even be surprised if there's a nice little dump following that event. And actually, I wouldn't be surprised if the Fed comes out and says, no, we're not really in a big hurry to raise rates. Like I said, we're more than happy for the FCASI to continue and for, fluffy risk assets to be bid up. If you went and borrowed money on the long end, ironically enough for the bankers, this is actually perfectly fine for them. The wider the spread in the long treasury versus the short-term interest rates, the more guaranteed profits for the financial services industry, so they love it. The person who's going to get killed, though, is the high-leverage borrower. And, of course, countries like Canada, their real estate market, it's just stupid. And now we're at the point, I remember back in like 2006, 2007. People just couldn't understand the runaway U.S. housing market and how it just kept going and going and going and going. And I'm seeing a lot of those same similar conversations about the Canadian housing market. And now the talk is, it's not a bubble. This is the way it is. And of course, this time it's different. So, it's interesting. I was in a cab recently, and the cab driver, classic, what's this story? Oh, here we go. Brian's going to go on for another hour here. There's a classic stock market story where the guy gets into the elevator, or it's a cab or something like that, and the cab driver is giving him investment advice, and he says, that's the moment I knew I had to get out of the market. So I was in this cab because I took my car into the dealer to get it serviced, and they give you vouchers to get back home, and then they go back and pick your car up. So I didn't even have a choice of the cab, and thank goodness I didn't pay for the cab because the guy was a total dilt. But he literally got into an argument with me to the point of swearing that the real estate market was going to continue going up in Canada, and that there was no bubble, and the sky's the limit. So interesting. I just made that sort of connection. I didn't make that connection before. So half the reason why I like doing these videos, verbal diarrhea, is I actually stumble upon some fun connections. So I have officially have cab drivers now telling me to invest in Canadian real estate. I think we're pretty damn close to a top. And it will be these interest rates that will be the Canadians' undoings. Because I can guarantee you, people are going to go back to the banks and they're going to say, well, I'd like to refinance my mortgage at 0.000 interest, and I can afford on my paycheck the monthly payment. And the banker's going to go, oh, I'm sorry, well, interest rates have actually doubled, so you can't afford this house anymore. And actually, we're not going to lend you any money because we don't believe you can afford this house, so we're actually going to foreclose on your property, and you are going to be homeless. That's basically what happened in the United States in 2008. And if you talk to somebody in 2007, they would say, you're crazy, that will never happen. But it happened. And basically the same conversation here in Canada. It will never happen. The real estate market will never break. And yet outside my window, I see it just within view. 1, 2, well, over there's a couple more, but 3, 4, and I see 5 complexes. These buildings are about 3/4 built, so all of this supply is going to hit the market probably in the next 6 months, year. Who the hell is buying this stuff? Oh, goodness. It's the same message over and over and over from Brian, but unfortunately, this is what ends up happening with me. Chalk it up to Brian's usually right, but Brian is usually early. By the time the actual market breaks, you're like, oh, God, I've been hearing this message from this clown for the past year. Finally! Now he can start talking about something else. So Fed, kind of a quiet day. Interesting, damn, I didn't talk about Kevin. Remind me to talk about the VIX stuff with the site people tomorrow. I'm really interested because it turns out that in the VIX, we're going to have a lot of options expire in the money. And these options, right, there's like 21, 22, 23, 24 put options, like hundreds of thousands of them. So those are usually written by institutions. In essence, they are going to be buyers of this asset in size. And interestingly enough, when you do the math, basically their average right price minus the strike price is what's going to be their cost. And they're basically going to load up the fucking boat on this thing to the tune of like hundreds of millions of shares or units or whatever the hell this damn thing is. Basically right at the bottom here. I found that fascinating. You don't often see huge, just massive swaths of options expire in the money. It doesn't happen all the time. This is a screenshot from, actually maybe I even have it. Let's see. Do I see it on my screen here? Well, I see a bunch of naked ladies. Yeah, that's what I wanted to show you. Nope, not that one. That's the hangout. Over here. Over here. There we go. No. Hey, there we go. So last week, we're level 3 program. We do a lot of options analysis. And we noticed, holy bejesus, this was last week, tons and tons of puts. I mean, seriously, like numbers that are just staggering. So if anything, I wanted to talk about this in the daily brief. So everybody who's watching the daily brief recap, consider this part of the daily brief. It's not really daily brief recap, so time limits don't matter. If anything, all you free YouTubers, you're getting a total treat here. But last week we studied, I mean, that is a ton of options. I mean, this is like literally hundreds of millions, if not maybe even $1 billion just sitting right there. Now I do see, you know, the VIX is going out around 20 right now. So here we are at 20. All of these options will actually expire in the money. That's a lot of options, and that means that they will be automatically exercised. The person who writes the put, they're coming in and they will guarantee to buy this asset. But see here, 24. Let's say their average is $4. Well, if they get exercised, then basically 24 minus 4 is $20. They're basically, all of these options, to all intents and purposes, they're going to be long from about this 1920 area. So usually you don't see this. Usually you see they'll push the market above or below a strike just to make sure that all these options actually expire worthless. These options are all going to expire in the money, and they will be automatically exercised, which means that some big institutional player, this is the important thing they have to know, is going to be long a ton of this VIX. I mean, staggering amount, billions of dollars worth of this VIX. They are forcibly going to be long. Now, what does that mean? Well, try and put 2 and 2 together, people. Would anybody, what would end up happening to the stock market, let's say, if the VIX index goes up appreciably? And would these people maybe encourage the VIX to go up appreciably? I think there's actually some very powerful information being sent to us from this image here today. I'm not going to tell you what I think is going to happen here. Hopefully you can put 2 and 2 together and figure it out on your own. But you should understand what's going on. As for right now, right, that, you know, that interesting enough, that's a Wednesday expiry. That doesn't mean, so we might actually get the expiry and then on Friday all fucking hell breaks loose. I mean, that definitely could happen. I think, you know, while the Fed's meeting and stuff like that, and, you know, getting closer and closer to this massive quadruple witch, and if anything, to get all that VIX on, right, what they got to do is they got to take the volatility out of the market. And they'll blame it, well, no, the reason why the market's so quiet is because of this FOMC meeting and how important it is. Well, no, that's not exactly the reason. Anyway, we'll see how it goes. We did say on Friday there should be a nice little pop up top here to actually force the exercise of a massive 4,000 strike option series there, which would also be further anecdotal evidence. If they could get filled on that, that would be them selling stock up top here. So they'd have this massive short on the S&Ps. They'll be massively long the VIX. I mean, this shit writes itself, people. I can see it coming. Oh, and gee whiz, look, there's a big M trying to form in crude oil. See what happens. Interesting little junior stock market. Proxy is kind of emming out here as well. That's coincidental. I hope you guys are seeing a bit of a theme here, or hearing a bit of a theme. I did find it interesting. Like I said, I don't know how this, I think it's Panicook swap. One of these DeFi places is in a bit of a trouble right now. I don't know whether it has any traction or not. I did notice that the DeFi perp index is looking awfully heavy here. This looks very, very heavy. Terrible place to come in on the buy side. Lots of negative momentum signals here, so certainly nothing to do. If anything, the one caveat, the one saving grace about this market, and I was telling people here earlier today, is I think that people are kind of like, whoa, what just happened over there? It's not really like they're aggressively selling. I mean, there's no huge volume. I get the impression it's kind of like everybody's just sort of on pause. Just kind of going, oh, don't break down, you son of a bitch. So we'll see how it goes. I did notice that Ethereum actually did confirm inside bar failures here. Same thing with Litecoin. I thought it was funny. Somebody in the lounge posted earlier today, said, should we be at all concerned about things like bearish divergences? And I think it was even off like the weekly chart. Yeah, look at that. Oh, yeah. Bearish divergences not only in volume but also in price momentum indicators on things like Litecoin after we've had huge moves up. And I'm like, yeah, because this is a fucking risky market. The worst part about it is, it's just, I was watching The Big Short as kind of a reference piece talking to the site people. I believe that the Canadian housing market is exactly like that U.S. housing market in 2008. Identical. Or let's say 2007. And the shoe just hasn't quite dropped just yet. Anyway, we'll see how it goes. Cab drivers telling you to invest in real estate. There's your cue. So, ironically enough, actually, and I actually did quite a bit of selling in these altcoins, banging out doubles, all that kind of fun stuff. And I don't want to have to, at the end of the year, worry about, tax bills or anything, or scrambling to find money to pay taxes. So I actually did let some Bitcoin go out of my Trex trading account, just so I've got a nice big whack of cash sitting there. And of course, if price does fall apart here, then great. I could always, I suppose, go and buy that back. Although I would prefer just to leave that in cash, just to make sure I have that cash there as a tax payment vehicle. And ironically enough, in hindsight, maybe it's a perfectly good idea. Up in foggy, boggy levels, maybe we just let some go and just play from a position of strength. Didn't sell all. In fact, sold about a quarter of the corn that I had on the books there. So like I said, got a bunch of cash. Still got tons of corn if they want to take this thing higher. Kind of the definition of playing from a position of strength. Also, too, it gives me the ability now, I can frivolously go and spend my other Bitcoin on buying other altcoins that look interesting and not really be too worried about things like tax implications and what the year-end balances are going to look like, because I got all that cash just sitting there. So there are interesting names. I think I told you I went and picked up some of this XTC here recently. That, to me, I'm not saying buy it. You know how this channel goes. I don't really care whether you buy or sell anything that I talk about. But I'm very interested in making money from trading, and I believe that I think I can make some money buying this down in here and looking to sell it up in here. I might swim around here for a month or two. Totally fine. But that's the kind of way that I participate in the market. Yeah. I suppose you could kind of see the carnage developing here in the DeFi that, there's no way in hell I could trade something like this on the buy side. It's just not me. I was saying, if this is actually a bear, you probably want to let this trend line break, let all these M's confirm, and then on the sort of counter trend rally, dead cat bounce, that would set up your short trade. So I'm not really ready to say, yep, that's it, she's done. I would prefer to see this break, and then we sort of think about, okay, what does the next couple months look like in this space? And I think a good, a nice healthy cleanup period actually would make a lot of sense. That's just me. Don't hate me. It's just my opinion. So, there's your market, right? Didn't really get any doubles off here. I missed one double on a warrant yesterday, which was kind of a funny trade, but 6 1 half dozen the other. Did get off a nice double on another vehicle, VCIM, and actually spent a lot of time going through VCIM criteria on the daily brief and how we can build. TradingView has a share count tool, so you can screen for VCIM ideas off of TradingView to a certain degree. It's only partial research. But ironically enough, my biggest message to even the community people was, these VCIM names make a lot of money, but at the same time, too, it's not easy finding these things. It takes a lot of work, and you got to put a lot of time and effort into your research. So to a certain degree, I think we're in a part of the market now where it's probably really easy to go and spend a lot of money, but not really actually buy good ideas technically. So it's kind of like I'm just saying to people, look, if we can build our fundamental list, but then probably we want to just wait for price to actually come down into buying zones and make W's and divergences and stuff before we go risking our hard-earned money. Be careful here, folks. It's getting dangerous again. Okay, I think I'll leave the free video at that. Try to make it a little bit shorter, but if anything, it was kind of cool showing you that VIX options information. That's the kind of analysis and sort of value that I provide for my level 3 advanced God mode students. We really go deep down the rabbit hole with this stuff. So maybe that's a nice little sales pitch too. So, all right, have yourselves a great day. All the best, and bye.